This is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I am also the trader behind the Trade Spotlight advisory service. My service is 3 segments, all under one advisory. I'm covering futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that will spotlight 2 or 3 markets that may become trading opportunities for this week. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. I have 2 charts to get into today. The first is in the dollar index. This is the December 2022 dollar index futures chart. We've had quite the rally this year. Just from the beginning of June, the futures were around the 102 price level. And you can see as of today's trading, we're at 112.95 and a half. So we've had these rallies and these pullbacks. Rallies and pullbacks. And then we had this steep parabolic rally with a stronger pullback. And we're starting to see that again. You're starting to see here on the right side of the chart, another rally in this market. This is after the Fed announcement last week. The dollar's heading up again. What I'm watching for is this 12-month contract high that I circled off there. That high is 114.74 and a half. That's from September 28th. I want to make sure the market doesn't break that high and then begin to roll over. And I think that's an opportunity to sell this contract on another push lower towards this lower trend line, which potentially can be a support level or even a target, which would come in around 111. Between 111 and 111.35, which is a 20-day moving average. Long term, though, I'd like to see the market get back down to this support level at 107.37.3, which is an 89-day moving average. And then stop losses would go above these recent highs, maybe even that 12-month contract high that I identified. But first things first, we need the market to trade up into this area, 113.5, 114, settle in and start to roll over. Right now you have a conflicting trend indicator, mostly because this market has been choppy. The momentum is still up, but starting to wane, and this is the turning point indicator. It's above the 80 level here, so that should be getting ready to flip over as well. So we're going to be patient on it, but it could happen this week, where the dollar trades up into this area and then begins to roll over, and that's where we're going to take an opportunity to sell the contract, the futures contract, to the downside. Let's take a look at our second chart for today. This is the December 2022 soybean oil futures contract, and here we have a sideways trading action going back to about the middle of the summer here. We had that one dip in July, but going back to about the June after the sell-off, we've kind of been hanging out in this area between this 38.2% Fibonacci retracement, which is around 64, and the 61.8% Fibonacci retracement, 69.82. We've been bouncing around in that level. These moving averages, you agree. You've got a 50-day moving average coming in at 64.91. There's a 20-day moving average, 64.65. So you can see these averages here. And actually, there's one more there. The 200-day comes in at 65.55. Right. So we've got all these moving average just tightening up right in the middle of this range. But you can see down below, we've got strong momentum building to the downside with both the stochastic indicator and the turning point indicator. So I think this is an opportunity to sell this contract. To see if we can't get down to this lower trend line, which starts with the 12-month contract low. That was made on the 14th of July at 54.42. And then as of last week, those recent lows. I want to see if the market can't trade down to this lower trend line again. So it'd be a quick trade, but nonetheless, it could be a potentially profitable trade if we get some follow through with strong momentum down to this trend line. Stop loss would go above these recent highs here. The highest one looks to be this high here. Let me get that for you. That is 68.16 from August 12th. So what I'll do is put a sell stop below today's low and then potentially even a break of this moving average here to sell the contract. So I'll get that out today. So that's a new trade opportunity here in the December 22 soybean oil, new entry. You're welcome to tweak it if you like, the stop and the target, but that'll go out today and you'll have that recommendation in your inbox. Here's what it will look like. You'll get the email. It'll show which segment the trade recommendation is made in, a write-up of the trade. So a lot of what I cover today will be in the bean oil write-up here. Link to the video, precise entry and exit orders so you know risk reward. Again, you're welcome to tweak it to fit your own trading style, and then you can click on the chart to blow up my chart to see it a little bit closer. If you're not following me, you won't get that email, so I encourage you to do so. It's a free resource to anyone. Just go up to the Daniels Trading website, click on advisories, and then under technical analysis, you'll find Trade Spotlight. You can read more about it. Click recent posts, hit the orange button to subscribe, and then you'll get the trades and trade management emails along with Beyond the Spotlight videos and the weekly summaries. Here's all my contact information if you have any questions. We're waiting on the dollar index, and we're going to work the soybean oil. Otherwise, we don't have any current positions on, but feel free to reach out with any questions about these markets or just the markets in general. There's all my contact information, local number, cell phone, and toll free, and then you can also email it, tradespotlight@danielstrading.com. Thank you for taking the time to watch and listen, and happy trading.